Hi, everyone, and welcome to this edition of the Insurance Experts. I'm really excited to have on the line Gary Polk. Gary Polk is an asset-based long-term care expert, and I wanted him to share with us today a story. But first of all, Gary, why don't you tell us a little bit of your background? How did you get into long-term care?
Thanks, Mark. Thanks for having me this morning. I appreciate it. I actually got into financial services business a little over 30 years ago. My background is in accounting. Went to school, graduated in accounting, and worked for the IRS for a couple of years. And then got my CPA certificate and worked in accounting for a few years and realized that really my desire was to help people in the financial services side. So again, a little over 30 years ago, I made the switch to financial services, insurance, investments, and all the things that we do. About 20 years ago, though, I really started zeroing in and having a desire and more of a passion to help people with long-term care planning, because I saw a void in that there weren't a lot of people were selling it and offering it, but not a lot of people had great expertise in the area. And then as new products became available, it kind of excited me even more because there's so many more options nowadays.
Yeah, tell us a little bit. What are all the different options that you use today for long-term care planning?
Well, of course, traditional long-term care, which is the foundation of the business, which is what most people are familiar with. It's an insurance policy, pay your premium, get a benefit. Hopefully you'll never use it or never need it. And then over the last 10 to 20 years, there are these hybrid products that have come about. I like to call them asset-based products. So it's just the combination of a life insurance policy and a long-term care benefit, or an annuity product with a long-term care benefit, and ways that you could use existing dollars even, and by repositioning and leveraging an existing dollar where maybe your need for that product has changed over the years, and here's a way of getting multiple benefits without it being an expense, if you will.
I see. And I know you have a client case that you were working on recently. Tell us a little bit more about your client that you worked on with this asset-based solution.
Sure. So a friend of mine who happens to be a stockbroker called me one day and referred me to his girlfriend, who was interested in long-term care but didn't really want to pay an annual premium. So I met with the two of them, and she's fairly well off financially and has, enough assets. She's divorced several years. She's 59 years old with two grown kids that are both doing well. So I just gathered facts and looked at what she owned, and we found out that she had a old whole life policy, and she really didn't need the $600,000-$700,000 of death benefit, which is why she had purchased it maybe 20 years ago. And it had accumulated about $167,000 of cash surrender value. And so she wanted to know, is there a way we could use that, since she really doesn't have the need for the death benefit, to possibly purchase long-term care insurance.
I see. And what was her interest in long-term care? Why was it a need for her?
She's currently going through a problem with her mother, who's in her mid-80s, who's had AIDS come to her home, and then she hasn't liked the AIDS, and then my client, Vicky, had to step up and has to be there a lot of the time, and they're going through a lot of her mother's assets. So she doesn't want that to be the case with her. She wants her assets to be used for the intention, which is retirement. And so she really wants to have some protection in her 80s. And she repeated that several times. She's very healthy. Nothing's going to happen to her now or in her 60s or 70s. So she wanted some suggestions on how to best have the most coverage possibly guaranteed to her in her 80s.
I see. And so what were you able to do with this existing asset? How does that work, being able to use it for long-term care?
So we're able to do what's called, for those of us in the business, a 1035, which is just a code section of the Internal Revenue Code, tax-free exchange, moving money directly from the insurance company to a new insurance company, purchasing an asset-based long-term care policy with the $167,000 of cash value.
Okay, and how much in terms of benefits would she get for long-term care if she needed it?
Right. It starts off with about $370,000. Again, what I like to call bucket of money, a pool of money
Hmm.
that would pay starting off about $4,500 a month.
Hmm.
But she really wanted to get maximum inflation protection, so we added a 5% cost of living rider, which really, over many years, drastically increases the benefits to the point where at age 80 would be a little over $1 million bucket of money,
Hmm.
over $1 million
Wow.
of dollars, as well as over $12,000 a month of monthly benefit. Both of which, the access to the bucket of money and the monthly benefit, are completely income tax free.
Wow. And what happens if
And
she doesn't need long-term care?
if she doesn't need long-term care, there's about $170,000 death benefit that would be paid to her beneficiaries, which are
Mhm.
her same two children from the life insurance beneficiary
I see.
designation. And what she liked about it is one movement of money and no other premium has to be paid. Completely
Hmm.
paid up, and every number is completely guaranteed. So
Interesting.
she, was thrilled about that.
Yeah, and it seems like there's a proliferation of new solutions that offer this type of concept. So I know there's a lot of different ways that you can design the plan with inflation. I know you can do certain plans with traditional long-term care as well, single premium. So it's kind of becoming a new marketplace almost out there, a new funding source to get more people to get a plan in place.
Absolutely. And when you could use existing dollars and leverage those dollars, sometimes 3, 4, 5 to 1 for
Right.
tax-free benefits, it's really incredible. I just find most people aren't aware that these opportunities even exist.
Wow. Well, thanks for taking the time, Gary, to share with us this story. This is a really intriguing strategy. I'm sure a lot of folks out there will want to explore.
Thank you. I appreciate it.
And
Hopefully.
we'll do some future interviews on these concepts in a later edition as well. So
Okay. Thank you,
thanks for
Mark.
joining us.
Sounds good.